Ladies and gentlemen, welcome back to Chipotle FX. It's been a while since I recorded any content for YouTube, and I've honestly been away, for a while, and I've just been doing so much research, trading. A lot of things have happened in the background, and it's been a lot. A lot has gone into the works. We've launched a premium channel, signal services. We've launched a copy trading service, all at Chipotle FX, and it's just about giving you the very best of the best you get, and that is what we're all about. And right now, at a point, I got into the institutional way of trading. I started looking at the market using order flow, using the order blocks, the breaker blocks, supply and demand, and all those kind of stuff. And if you know me naturally, you will see a lot of trend lines on my chart, meaning I analyze the market using a lot of trend lines, and things like that. But this time around, I'm still using the trend lines, but now paying greater attention to market structure, paying deeper attention to supply and demand zones and levels of order flow, and where how the market behaves in and around certain areas. So that is now the primary thing, and right now I'm here to draw a big sort of comparison between institutional way of analysis and retail methods of analysis, and actually tell you that there is nothing wrong with how you're trading. There's really nothing wrong with retail methods of analysis, and there are losses everywhere. You can take losses on the institutional method, you can take losses on the the retail method, and at the end of the day, all boils down to how you're able to manage your risk and manage your money. So that is what it's all about. So right now in front of me, I have a very naked chart, and this is gold on the weekly time frame. And I am going to analyze this combining both the retail method of analysis, which is the use of trend lines, which is my typical way of doing analysis, of carrying out analysis, and also taking into account areas of supply and demand in the market. So let's jump right in, guys. So first of all, when we see this chart, the first thing we notice is we've been in an uptrend. And when the market is going up, you want to go up with the market. When the market is trading to the upside, you want to trade with the market. You want to do what the market is doing. But right now, we've started to see that, right here, we broke through structure. There's a move here that broke through this structure. At the moment, we are still, very, very undecided at this level in the market. Now, one thing I want to point out is that when you're looking at things from the retail methods of analysis, the retail methods of analysis is not going to kill you, neither will the institutional method save you. At the end of the day, you are your own superhero in these markets, and only you can, make the big decisions about your money and how you choose to look at the markets. Because at the end of the day, there's so much going on these days with a lot of guys getting into smart money concepts and things like that. They really work, they have their own level of effectiveness, but the retail method has its own accuracy, and how we trade has its own accuracy. Now, first of all, when I pick up this chart, how I would normally analyze the chart is I'll mark in this low, and then of course I would mark in this low here. I'll mark in the obvious lows and the highs that I'll see, and then I'll mark in this highs. And when I mark these levels, I want to see, okay, what is the market doing in and around these areas? We are very, very clear that we are in an uptrend. But, normally I would, have the trend line like this. I would have the trend line, sitting there. And when I have the trend line in there, then there's really no need to, have all those lines up there. This is how my chart would typically look. But then when at this level right now, I cannot really see any level of supply or demand. So I'll go down to the daily time frame. And when I go down to the daily time frame, looking at things how I would normally look at it using the retail methods of analysis, is you will see a descending structure, right? Very, very obvious descending structure we'll have right here with obvious three touches. We have this one here, two, and then we have the third touch in agreement with the trend line. But then here is the secret. The market is not going to react to a trend line. The market will never ever react to a trend line. It is very, very naive for you to think that we've had 1, 2, 3 and the market is just going to move because there's a 1, 2, 3 touch of the trend line. That's not what the market is doing. The market is respecting some level of order flow. I'm sure if you look to the left, you would see a certain level of supply and demand looking at this level. That is what the market is respecting. The market is respecting this level of demand right here. And this level of demand, you can see if we zoom closer, you're going to see this last sell before you buy candle. You see that last red candle there, and that last candle was what bettered this entire move, that broke through these structures here, that grabbed all the liquidity here, and then we had a rally to the upside. So this is, you can call this is the base for this entire rally up here. Now the market has come back to that base, and we are likely to see a reaction because the market has landed right in this base here, not because the market touched 1 2 3 and then if you also look at it here, we have a 1 2 3 touch. The market is not going to just shoot to the upside because that happened. No, that's not why it's happening. So you can start to see that if we combine the retail method of analysis with the supply and demand, with the institutional, way of doing things, and you can see these candles were slightly mitigated here with these wicks coming into this level. We had these wicks coming in to mitigate some of these orders here before the market eventually took off to the upside. But now we've come into this area again, and we have an engulfing candle. We have an engulfing candle right here, and the market has reacted to this supply, to this demand zone, and we are starting to see a bit of reaction. But then we're not really interested in taking longs yet, and that is because obviously we still have a level that has not been broken here. There's imbalance in and around these areas. There's imbalance here. The market is most likely going to come up and fill some of that before we continue to the downside. But here is something interesting. You can see I've shown you this level of demand here. Naturally, I would also have my trend line resting above this structure. You have this structure here. Now, since we've had the third touch, we have 1 2 3. Normally, we would expect that we have 1 2 3 on this trend line here, and then we expect to sell that to the downside. But you're going to be naive to just think that, why does the market have to come here? First of all, we have imbalance here, inefficiency at this level that the market is going to have to come and fill. This is a reason for the market to be interested in coming to these areas. So now it is not going to, take us by surprise. And if you notice the level of inefficiency, so inefficiency is basically something like inefficiency or imbalance in price is when we have a candle that looks like this, and then there is no wick to the left or to the right. So as you can see from this point here, from this point down to this point, there is no wick anywhere on the candle. So the candle is just sitting on its own. So you call that imbalance or inefficiency in price. I've been, following ICT a lot. So, very, very incredible guy and things like that. Should be an incredible man. He has a boyish voice, but I'm sure he's a much older man. So now we have this level here. We have a lot of, and apart from the fact that we have imbalance in price on this candle, then we have a lot of liquidity sitting above these highs here, these relatively equal highs on that level. So now that is a reason for the market to possibly come to this level, collect the liquidity here and grab all the orders, then before the market falls away. So now we are not just drawing our trend lines and then placing our resistance level and all those kind of things. We're not just placing them blindly on the chart. And now for people who trade support and resistance, you could see you have this level here. You could, I don't know how you're going to draw that, but you could have this level here and then expect that when the market comes up to this level, we are going to see a reaction for the market to fall off. But if you jump in too early on this, you could get stopped out, from all those kind of mitigating maybe up to all the way to this high here, this supply, there's a supply point here, there's a supply here. So the market could come all the way to that point to mitigate that, and then you're wondering, why is the trend line not holding? Why is this not happening? You just sold at the trend line. Why is it continuing to push up? And then you just notice that the market would have come up, done something like this and then come down, and then you say, oh, the trend line didn't work, or the trend line didn't hold, and all this kind of thing. So this is why a trend line will hold or why it will not hold, because it is not just about the trend line. We are also looking at the levels around the trend line. We want to see things happen at certain levels of order flow that the trend line is also occurring. Now, when we look at this, we can also say that, okay, there's a resistance level here. This is a key level in the market. You can see that, there's a good chance that the market, all this is happening on a daily time frame, right? All this is happening on a daily time frame. So now, right now, this is the most recent high in this market right now. This is the most recent high in this market right now. So this is you see the market making lows, lower lows, lower highs. Then we have this most recent low and this most recent high. Now, for us to have any confirmation, or for us to consider, at this point, we could say that you could buy that, you could sell this in the short term. It could come back, create a double bottom, and then come to the top here to collect the liquidity, fill the imbalance, possibly tag this level of supply and come down. But right now, we want to also see the other side of things. This is, you see the market flowing down, just having a free flow to the downside. We drop down the time frame to the 4-hour chart, and then we start to see more pictures coming from the market. Okay, let me go back to the daily time frame and draw that structure on the daily. We have this descending structure right here. You see this descending structure right here, and then you have this type of structure here. So you see that is what the market is doing. So now that we've seen this one, two, multiple touches here, then just touches here and there on this trend line. Now, we are not trading, we're not going to trade the breakout of this channel because the market has broken out of a channel. No, we are going to trade to the upside based on the fact that we want to see a clear break and hold above structure here, above the structure in the market. When we break above that and hold, we want to see the market give us a pullback and give us signs that we are going to continue to the upside. At that point, we can enter a safe trade and then hold our target all the way to these areas to collect this liquidity here, fill up the inefficiency, and then probably tag this high. But you don't want to be pushing your lock too far. You want to, get out as soon as possible in your trade, so that, because the market reverses like crazy these days. You don't know when the market is going to turn around on you. So now we drop down the time frame to the 4-hour time frame. We start to see clearer pictures of the market. Oh, sorry about that. We start to see clearer pictures of the market. And what I want to do is I want to pull this back. And why I'm pulling this back is to enable me see the lower time frame, the story that the market is telling on lower time frames. Now, from what I can see on the lower time frame, the market has come into this area of supply. Can we see that? The market came into this area of supply, and then there was a sharp rally to the downside. There was a sharp fall off. So this has become a base. So this could be a rally base drop. And now we have this 3-touch trend line agreeing with that. Can you see how that just aligns itself? And then you have this, the lines are beginning to get much more. That's fine too. Then you have this, you have this line here. So we have 1, 2, 3. Then the market pushed up. 1, 2, 3. The market dropped. Now, when we drop down the time frame further, one thing we do see, of course, we've seen this level of supply, how the market reacted off this level of supply, and then we had, this was a rally base. This was a rally base drop. You can see we had the rally here, then we had a base, and then we dropped off from the zone. And then, of course, the market came in and created equal highs here. Of course, these equal highs are nothing but those levels of liquidity where the market could come for some liquidity and all those kind of things. And then, people, thinking the market is going to keep going down, but meanwhile, we just come back, tag this base here, use it to form a new base, and then we drop the market. Now, obviously, the chart is beginning to get a little cluttered up and all those kind of things, but you get the point, you get the entire message, that we are trying to draw lines between institutional order flow and then how the retail world also looks at things. So you cannot, when you're trading using chart patterns and all those kind of things, just like, whoever knows me knows that I love to look at the market based on patterns, but you must understand the origin of the pattern, where the patterns are coming from, where the patterns are going, and understand the order flow behind the pattern. So that is how the Chikwado FX strategy is beginning to evolve. We are understanding not just patterns, we are understanding the order flow behind the pattern, and we're studying the order flow behind the patterns. So right now, we get rid of this, and obviously we're still within this demand zone. This entire blue line starting from this point to this point is the entire demand zone that is causing all of this rally and all that kind of stuff. Now, what would I want to do looking at this pair? I'm like, okay, this is a 1, 2, 3 touch, and now we've had this impulse leg to the downside. Now, if you go down the time frame, you will notice that the market has created 1, 2, 3 touch all the way to here. But then do not forget that this is the supply zone that caused this massive drop in price. And then the market has come, tested that again, and we're starting to see the market fall away. So now we could, take either a sell all the way to here, or wait for the market to hit the liquidity up here and then come down before we overall start looking for our buying opportunities and waiting for the supply zone up here to be removed before we get involved and start looking for buying opportunity. So one thing is very, very obvious, is that the market actually travels in order flow, travels based on supply, travels based on demand. And where are the institutions willing to buy? Where are they willing to sell? Where do they want to put their money? And whatever strategy you're trading, you must take into account institutional order flow, how the big boys are putting their money into the market. Because at the end of the day, the market is not going to behave or do anything based on the trend line. Maybe you put a trend line here, you put a line here. The market is not going to respect your line. The market is not going to care about your trend line. Every single move you see happening in the market takes effect from an area of supply on demand, or takes effect from order blocks. So that is how the market moves. That is how the market travels. And so coming here, we're going to be studying deeper into, we're going to be getting very, very deep into trading institutional way, and also combining that with retail methodology. But there is not a lot of problem with retail methodology. Your support and resistance could work, your moving averages could work, as long as you study your moving averages and your support and resistance from an order flow perspective. So as you can see right now, my entire my entire system has evolved into looking at the market on the basis of the retail methods of looking at chart patterns, but at the same time understanding the order flow behind the pattern. So guys, honestly, I'm happy to be back with this content, and there's going to be plenty more coming. So I'm pleading with you and hoping that you subscribe to the channel. I'd like to see you subscribe, and just hit this the bell button beside the subscribe button, so you get notified whenever I come up with new content. And the links to our free channels is going to be free resources and free platforms are going to be on the description below. We have a free Telegram, Facebook, Instagram. Please follow our platform, so that you can stay in touch with whatever we're doing, because there is so much coming in the works. Like, so much is coming, and you don't want to miss out on all these things. The markets are very, very easy to trade. It's not as difficult as it's made to be, and things like that. People believe that the market is so difficult. Someone is doing something behind. No, the market is just respecting order flows. The market is just going to where the orders are and things like that. And you want to be trading with the boys that are moving the market. That is the big boys, the smart money. You want to trade with them. No matter how you trade, you can tailor your trading to blend with the smart money concept. That is exactly what I've just shown you here, using chart patterns on one currency pair and all those kind of things. So hopefully I'll see you very soon. I'll be coming up with more content very soon, and the more likes I get on the video, the more encouraged I am to make these kind of videos. And give me some love, guys. Give the video a like. Let YouTube know that people coming onto the channel people want to see this kind of content, and then YouTube will put our content right in front of people and things like that. So cheers guys, thank you very much for watching, and I'll see you on the next one. Thank you.